Hey everyone, my name is Dustin Miles. I'm with Momentum Multifamily. I'm super excited to have John here today. I've kind of like I mentioned before, I've seen you on LinkedIn for a long time, and so reached out and enjoyed the conversation we had, and just wanted to kind of continue that here. But John, if you could kind of introduce yourself, and we can take it from there.
Yeah, hey, thanks for having me, Dustin. My name is John Casmon. I am based in Cincinnati, Ohio, and I am a multifamily investor. I've been investing in multifamily for over a dozen years, but that wasn't always the case. I started off in corporate America. I was working at General Motors. I was there when we went through that bankruptcy time period. I
Oh
moved
wow.
over to an agency in Chicago, started building up my own personal portfolio, ran into some issues in my day job, and ultimately, that was the reason I decided to really focus on investing in real estate and figuring out a different strategy because what I was doing wasn't working. So, fast forward, we've partnered with others on $145 million worth of apartments. And we look to help people in one of two ways. We either do that through passive investment opportunities to join us or through education, through our coaching program. We have our podcast and just try to share as much information as we can about our journey to help others on their own journey as well.
Awesome. Well, that's great. Yeah, appreciate you being on. Would love to kind of, so you were, went to college, I think Wright State University,
Yep.
and backgrounds in marketing. So your corporate America job was in marketing. If you always, have you always been interested in real estate, or like where did real estate come from for you?
Well, I grew up with not very much. No one in my family went to college, so that was one of the things as I was trying to figure out, where you fit into the world and how to make it and how to get the things you want.
Mm.
One thing I realized is the people who I did see who had nicer things, usually they had a background in going to college, right? They had a corporate job. So I didn't
Mm.
know anybody that went to college, except for my best friend's parents. That seemed like the pathway. So that's what
Oh
I
wow.
did, right? Like a lot of other folks. So I went to college, first person in my family to graduate from college, got a quote
Mm.
unquote good job. I did everything you're supposed to do to pull yourself up by the bootstraps, if you will, right? And I found myself in corporate America at one company that went bankrupt very publicly at General
Wow.
Motors. And I remember one day in particular, I'm in my office. I actually come super late that day because I knew it was the day of layoffs. And I was told I was fine. Okay, my bosses told me, hey, don't worry about it. You're good. We like you. We need you. Don't worry about it. I go on the next day. We all know massive layoffs are happening this day. I show up as late as I can without, really causing a ruckus. And I show up and I remember back then you had your desk phone. So you had to pick up your desk phone.
Mm.
So I had a red blinking message, which meant I had a
Oh
voicemail.
yeah.
And my heart skipped a beat because I was like, they told me I was good. Like, why would they mislead me? Because my boss wasn't there when I walked in. And I'm like,
Yeah.
why are you not in your office? Right. I came super late for this reason.
Right, right.
So I pick up the phone and it's a message from the guy who sits in front of me. And he says that he got let go early in the day. He was diabetic, so he didn't know how he was going to pay for his insulin and his medication. He
Oh
had been with the
man.
company for 22 years. He planned
Jeez.
on, he was a lifer, there was
Yeah.
no plan B. He was a lifer. 22
Right.
years, a big company like that, there was no
Wow.
plan B. So I remember two things happened to me that day. One, a great sense of empathy for him and what he was dealing with. But
Mm.
I was also young enough in my career where I knew I never wanted to be in that position. So I started reading about, ways to create income and side hustles, and real estate kept popping up. But again, this is Detroit. This is in the middle of that last Great Recession.
Wow.
So investing in Detroit at that time didn't seem like a plausible plan. So I didn't really invest until I moved to Chicago. And I thought I was good, but fast forward there, I'm buying properties. I bought a few properties. I'm at this agency. Agency is growing. We're winning accounts. I'm overseeing the Miller Coors account. I'm overseeing Nike, Mountain Dew, some other fun things. And one day I go into the office and I get a phone call from my counterpart in New York. And
Okay.
he's like, "What's going on there?" I'm like, "What are you talking about?" He's like, "Well, they're here and they're taking everything." I'm like, "Who is they?" He's like, "It's the bank. They're seizing our assets.
Oh
They're taking
wow.
computers, they're
That's
taking fax
crazy.
machines, printers." And I'm like, "Wait,
Wow.
what?" So I hang up with him. I call the CEO and the CEO is in Houston. He's oblivious to what's going on. So he's like, let me call you back. So he
Wow.
goes, he has some phone calls, and the company ended up going into bankruptcy. And at this
That's
time,
crazy.
I was sitting there like, okay, I got into real estate to avoid situations like this, but I
Yeah.
didn't have the cash flow necessary to insulate myself and my family
Right.
from this situation. The first time, it was just me, right? So I was like, whatever.
Wow.
Worst case scenario, I'll get another job, I'll move, whatever. Here, I moved to Chicago, got married. I had my first child. My wife is pregnant with my second child, and I had just invested all of our savings into another real estate deal.
Oh.
So I was in a
Jeez.
situation just struggling, man. But that's when,
Yeah.
again, I made some other choices and the light bulb kind of went off of what I needed to do next.
Wow. What the deals, what sort of real estate are we talking about here? Where
Small
there's
multifamily. Yeah, I was
okay.
doing small multifamily. I would read books and listen to podcasts, and everybody that I would listen to would say, "Oh, I started in single family, and I wish I got
Mm-hmm.
multifamily sooner." Right? So I was like,
Mm-hmm.
"Well, why don't I just go straight to multifamily?" Right?
Yeah.
I obviously
Yeah.
can't do these huge deals, but I can do some smaller deals. And I started with a
Yeah.
duplex, house hacked it, bought a 3 unit. Then I bought this 8 unit building, and
Oh wow.
this 8 unit building was supposed to be like the turning point. It was going to
Yeah.
get me in a larger
Yeah.
multifamily. People would want to invest with me,
Yeah.
and that is not what happened. What ended
Oh
up
wow.
happening is I learned that with commercial real estate, it's a bit of a different game. This is
Mm.
the first time I work with property managers. I hired a quote unquote good property manager. However, it wasn't the right property manager. So I
Mm.
learned the distinction there. And I also made some mistakes in dealing with residents. I didn't really understand some of the challenges with more of a C class property.
Mm.
So some of the residents had some issues. One lady literally didn't pay rent because she had ghosts. Um,
Okay.
I'm not a Ghostbuster,
Yeah.
but
Yeah.
but she had ghosts, and another lady was
Wow.
pretty much running a farm. So you just run into these crazy issues that you don't expect. But ultimately, for me, I made that transition partially through hardship, partially through seeking mentorship, and getting the help I needed to really think about how to approach the business.
Wow. Wow, that's crazy. Well, so you're in Chicago, you basically get, another, you know, you have another company that's not doing so great and going through bankruptcy and all that. So did you from there, did you move away from Chicago or find another job or what that look like?
Yeah, I stayed in Chicago. The good thing was the CEO basically said, listen, if you stay, and he said this to a lot of people, not just me, but he said, if you guys
Mm.
stay, we'll pay you out of pocket while we figure this thing out. So they actually created a new company.
Oh, wow.
There were some other issues that were out of their control. We had did a merger, and the merger
Right.
didn't go well, and that's what ended up leading the company to disarray. They ended up
Mm.
launching a new company. They paid us out of pocket and gave us a little bit of leeway. But for me, that's when I knew, hey, you can't bank on this corporate job. You better figure out your own path. And
Right.
what I
Wow.
ultimately did, and timing just kind of works out. I went to this 3 day workshop, right? So I went to a free workshop. The free workshop led to the 3 day workshop, and
Of
it was this
course.
real estate investing thing, right? They're
Yeah.
selling their mastermind, their big
Hmm.
programs, and I'm open to that. I'm a big believer in coaching.
Yeah.
However, the tactics they were using were just over the top. I mean, they were telling people to max out credit cards and go get
Oh,
a second line of credit on your house and
I
or
think
your
I went to that one.
yep. So yeah. You and
Did you
I are
run to
not
the
the only
back of the
ones.
room too?
Go to the back of the room. So
Yeah.
I didn't go. My wife and I sat there, and what we did do is the third day, once we realized on day two what this really was, we decided,
Hmm.
hey, we've already hired a sitter for the 3 days.
Yeah.
Let's maximize this third day, but instead of going to the event, let's go to the library. So we went to the library and we grabbed a bunch of real estate books off the counter or off the shelves. We got a big table and we just spent 8 hours mapping out like a vision and what do you like
Oh
about this and
wow.
this.
That's cool.
Two things came out of that. One, I realized I had more resources than I thought, and one of them was bigger pockets. The second was this notion of other people's money,
Yeah.
and I had
Yeah.
heard of it. obviously new people were raising money. I didn't think it was right for me, right? I
Yep.
didn't know people with money.
Yep.
The people I knew who had money, one, I didn't know 'em. If I did know people with money, they certainly wouldn't want to invest it with me. And
Yeah.
here I was
Yeah.
broke basically because I put all my money into
Yeah.
this other real estate deal and I didn't have money to do my own deals, right? So that notion started to really sit with me to say, okay,
Mm.
well, is there a way to do this? I ended up meeting my mentor about maybe a month or two later, and that really was a paradigm shift where
Oh, wow.
he helped me understand how to raise capital for deals. He had raised $1 million for his first deal without using any family money.
That's
And
great.
that was very intriguing to me. And that kind of opened up the door. So the next deal we did was actually 192 units. So it went from an 8 unit
Wow.
deal
Okay.
to a 192 unit deal,
Yeah.
all through power syndication and networking.
Yeah. That's great. Wow. Okay. That's awesome. Yeah, I can definitely relate. Yeah, kind of I went to a few of those where they sell uh, crowds, people were running to the back, buying, dating me a little bit at least, but they were going to buy their, CDs and all
Yep.
that. And
Yep.
like a entry package was a grand, and then it went, but yeah, they like gave people scripts, I think, for like how to talk to their credit card companies to raise their limit to buy the 20 or $30,000 or whatever it was. I don't remember, but yeah, it was isn't but I can also relate in terms of before I kind of got in the circles, and I had hired a coach too, similarly to you, but I'm like, well, why would anybody give me $1 million? And so, anyways, can definitely relate. So that big first deal, 192 units, where was that, and like, what that kind of look like for you?
Yeah, that was closer to you. That was in San Antonio, Texas.
Okay.
And that came about because my mentor had other clients, and he had his first conference, the best ever conference. My mentor is Joe Fearless.
Oh,
And
cool. Okay.
I go to the event, and my wife actually meets these guys, one of the guys, and she's like, "Hey, met this guy. We should do dinner with him." Like, okay, we have dinner, get to know each other. Well, fast forward, I ended up launching my podcast, and he
Mm.
was one of the early guests. He's actually guest number two, so
Oh, cool. That's
episode number
cool.
two, and I have him on the show. We just connect. What's going on? Are you finding
Yeah.
deals? At this
Yeah.
point, I'm out there hunting for deals, but I'm having a hard time finding anything that pencils. Well,
Yep.
they came across a deal, and at this point, I'm now talking to investors. I've got people interested. I'm excited, but now they're waiting on me. Like, hey, man, you told me, there was going to be some deals to invest in. When are you going to bring them? So I feel like the clock is ticking, the pressure's on. And I
Hmm.
tell them, I say, listen, man, if you need help with that deal, I'd love to be involved, man. I can help with marketing. I can help with this. I could bring a little capital. So we have a
Yeah.
conversation. He says, okay, well, hey, let me keep that in mind. About a week later, he calls me and says, hey, are you still interested in partnering with us? And I did. And the lesson there is I sought out to basically do a 12 unit, right? I bought that 8
Right.
unit. In my mind, I was getting a coach to help me buy a 12 unit and raise half that money or buy a
Right.
16 or a 20 unit. And then I learned what syndication was because I had no idea what that was. I
Hmm.
never heard of the term or anything like that.
Yeah.
So once you get exposed to strategies and opportunities, it starts to open up the possibilities. And if you can be flexible on the how you do something, you have an endless amount of ways to make a deal happen. Up to
Yeah.
that point, I was looking for a 12 to 20 unit deal where I could be the lead operator, the lead sponsor. I would raise all the capital, I
Hmm.
would do everything myself. And it was really hard to find a deal like that. But once I decided to be a part of a team, as opposed to trying to do everything by myself, the opportunity kind of presented itself. Now, I'll be clear. I was really, really intentional about that first deal. I didn't walk around asking everybody, hey, can I partner with you? Can I work with you?
Right.
This was
Right.
someone that I'd gotten to know over the last 7 or so months. We had
Hmm.
the same mentor, so I knew we kind of had a core sense of thinking about the business the same way. I'd watched what they were doing over that 6 month time frame. And when I brought him onto this show, it was really because I wanted to strengthen our relationship. So when
Yeah.
I knew that he
Sure.
had a deal, I was like, you know what? You're one of the people that I would want to partner with. And I think
Right.
that's really important because ultimately you can find a good deal, but the people,
Yep.
it's the most important thing. Find
Yep.
sponsors, find operators that you believe in, that you know have the ability to navigate whatever life throws at them, because
Yep.
that's going to be the biggest choice. So for me, that was the critical part, is finding partners that I believed in to attach myself to, and that gave me the confidence and credibility to kind of scale from there.
Awesome. That's great. Yeah, it's funny too. I've never spoken with Joe Fairless or if, yeah, talked to him or anything, but I think I live in Fort Worth and I'm from Fort Worth and I believe he's from Fort Worth too. So I'll have to look him up and see if I can try and figure out what high school we went to and see if there's any commonalities there. But yeah, I think he's I don't know that much about him, but I think he maybe lives in your neck of the woods or New
He
York. I can't
does.
remember.
He lives in
Okay.
Cincy. Yeah, you got it all
Okay.
right. He's from DFW, lived in New York for a while, lives in Cincy now. But it's ironic because that's the only way I met him.
Oh
If he
wow.
didn't live in Cincinnati, I wouldn't know him. The only reason I met
Oh
him is
wow.
when I went to the library that day and I
Yeah.
talked about the resources. Well, one of them was Bigger Pockets. And I'm like, okay, well, you know what? I'm going to get more active on this platform.
Yeah.
And
Yeah.
I was very intentional about that. So as I did that, my wife is from Cincinnati. And I knew at some point, especially as our kids got older,
Yep.
we might be moving to Cincy. So I said, you know what? I want to start investing in Cincinnati. Let me connect with other Cincinnati investors. So I made a post on Bigger Pockets and I said, hey, I'm looking to connect with Cincinnati investors. Who should I talk to? And about five people tagged the same guy, Joe Fearless.
Oh. Oh wow.
And this is not like Joe today. This is
Yeah.
probably
Yeah.
10 years ago.
This early.
Okay.
Yeah.
This is 10
Yeah.
years ago.
Wow.
So at that time, Joe had one commercial property, right? That's it. He
Wow.
only had one deal. And I didn't drill him, so I didn't know all this,
Yeah.
but he had one deal. But everybody tagged him. So I said, okay. I said, hey, dude, I made this post. Everybody tagged you. I'm gonna be there in a month.
Yeah.
Would you have lunch with me? And he's like, sure, let's have lunch. And by the way, I got this podcast. Will you be a guest? And I'm like, I've never heard of your podcast, but sure. So I'm on like an early episode of his show, but
Oh cool.
we meet, we have lunch, get to know each other. We have a similar background. He was in advertising, I was in advertising at the time.
Oh
So we
wow.
built that connective tissue. And the thing that was great for me is we all have these limiting beliefs, right?
Mm-hmm.
You can look
Mm-hmm.
at Dustin, you can look at me and say, oh, well, of course these guys can do it. Look at his
Mm-hmm.
background or look at his connections, or he lives in Texas, right? Like it's easy to look at someone else and justify why they were able to have success and you wouldn't be able to.
Yeah.
But when
Yeah.
I was sitting with him and we talked about our background, there was nothing about him that shouted, this guy's an outlier. Now,
Right.
he does
Right.
very common things in an uncommon way,
Mm.
but the point is, I wasn't trying to build this I wasn't trying to raise $1 million for my first deal, right?
Yeah. Yeah.
I just
Sure.
wanted to raise 50.
Right.
If I can bring 50 and someone else can bring 50, that would have put me in a great spot. So I'm like, well,
Yeah.
this guy's done it. He can teach me how to do it. And by the way, if I make this investment, at a minimum, I'm going to learn how to do what he did. Now,
Mm.
whether or not I actually buy a property or I'm able to do it and structure it that way, that's on me. But I'm going to get the knowledge, which is the thing I needed, because my biggest concern was losing somebody else's money or not
Right.
structuring the deal the right way and, putting ourselves in jeopardy. So I wanted to learn that and take away that component. And that was critical for me. And once I had that, again, the doors opened up on the opportunities.
That's awesome. That's great. Well, and I mean, you took action. So, uh, and that's awesome. It's interesting. Just the number of resources that are available now compared to, you know, a decade ago. There wasn't a whole lot. I couldn't find a whole lot. I mean, yeah, I think there's, like you mentioned, some on bigger pockets. I'm in DFW. Lifestyles Unlimited was the only multifamily game in town, or at least that I had heard about, and I, had looked around and all that. But yeah, it's crazy. It's super, and there's been a huge kind of maturity process. I feel like with multifamily, just in terms of like, when I started, I was able to kind of do this part time, but like I operated like large apartment complexes while being an engineer, and like I'm like, people are like, "Oh, how'd you do that?" I'm like, I don't think I could do that today. It's just because it's way harder to it's a lot more challenging to operate right now. Back then we had cap rates going down and we had rents going up, so it was a good combo there. But I guess kind of fast forward to today. I know you have, you do coaching and you're a mentor, and then you have a good sized portfolio and all that. Would love to kind of dive into both those a little bit.
Yeah, let's start with the portfolio. Then we can certainly talk about coaching, right? So,
Mhm.
on the portfolio side, we're certainly growing. We believe it's a great time to invest. I know there's a lot of
Mhm.
uncertainty in the market right now, but the truth is, uncertainty is what creates opportunity. So, for
Yep.
us, when you think about tariffs or interest rates or whatever, if owners are a little uncertain, that means some of them are going to be willing to take a little less. They're going to be looking to sell
Hmm.
because they want to exit. Maybe there aren't as many buyers for these deals, so there's less competition, and that's going to allow you to get some really good properties at some really great prices. So that's why
Yep.
we're pretty bullish on the current opportunity. We generally take a longer term view anyway, meaning we're not looking to go in and flip something in 2 or 3 years. If that happens, we're open to it. But generally speaking, we're approaching with a 5 to 7 year hold period
Yep.
and looking to create more flexibility around that. So we like the opportunity today. We have properties in Columbus, Louisville, Kentucky, the Cincinnati market, all the way in northern Kentucky, up to kind of the almost near the Dayton area. So those are kind of
Hmm.
the main areas we play. We do have some other investments in the southeast markets like Atlanta, North Carolina. We've got a couple deals out that way as well. But for us, it really comes down to value add deals. We like to kind of force appreciation and look at opportunities where that stabilized cash flow is a strong return for our investors. We have no clue what's going to happen
Right.
3 years from now, 5 years from now. So our deals, we want to make sure that they cash flow from cash flow really well, and if the cap rates are compressed in the future, awesome. If
Yep.
not,
Yep.
and they're close to where they're at today, we still want to make sure that we're comfortable with the deal. And again, we want the flexibility to control our exit strategy there. So that's kind of where we're at on the property side. We've got probably about, out of the 145 million, we probably have about 45 or 50 million still in the portfolio. But again, I
Mm.
expect us to kind of start trading some assets this year and taking advantage of what we think are going to be ideal market conditions.
Awesome. And what does that look like in terms of you in terms of management, asset
hmm
management, what is anything you want to hit on there?
Yeah, great question. So we do use third-party management. Property management is a very difficult job, which I learned on my smaller portfolio, but then that 8 unit when I had my first third-party property management company. So you definitely have to identify the right property management company for your asset. And even still, it comes down to that on-site team. You're making
Yep.
sure you got the right people, the right processes to oversee that project. Uh, my role as an asset manager, it's taking a higher look, right? It's being the CEO of the property, of
Yep.
the investment. It's understanding what are our financials, what are our targets, what's the business plan, how's the market responding, what kind of traffic are we seeing, where should we be taking rents, do we want to be aggressive? Like I've got to take a look at all of that and ultimately put my team in a position to be successful. So to give you an example, we do kind of weekly calls on most of my properties
Hmm.
with our property management team, right? We go through our dashboard and go through key reports. As I'm looking at that, I'm comparing that with our projections and how are we trending and what challenges are we facing. And I'm trying to arm the team with the solutions, or quite frankly, the infrastructure for them to find the solutions to drive success, right? It's not on me to sit there and say, hey, go to Lowe's and get XYZ, right? It's
Right.
for me to arm them to say, okay, what's the challenge you face? How come occupancy is not higher? They might say, let me give you an example, right? Let's say you want to get occupancy up, right? You
Hmm.
want your occupancy to be at 95%. It's currently at 90%.
Yep.
What typically happens is the property manager is going to say, hey, we need to increase the marketing budget, right? Occupancy's down. We need to increase marketing. We need to spend $2,000, $3,000 a month on marketing. We need to do some apartments.com ads. and that's going to help us drive occupancy.
Yep.
Maybe, maybe not. Maybe the issue isn't awareness. Maybe it's not that you need to spend more on marketing. Maybe you're not getting enough traffic. Maybe
Right.
you're not
Yeah.
talking to the right people. Maybe it's overpriced. So
Maybe you
my
need
job is
close
not
the
to
back
just,
door. Yeah.
yeah,
Yeah.
it's not just to write a check and say, okay.
Hmm.
It's to take a look at it and say, okay, well, how do we reach that conclusion? How many showings do we have? How many calls do we have? How many inquiries do we
Hmm.
have on the property, right? What's our conversion rate? Is that in line with what we expect? If we know we have to see, I'm making this up, 10 prospects to
Yep.
lease one unit, well, are we seeing 10? And if
Right.
not, then maybe you're right. Maybe it is the marketing. But there are also some low dollar things that you can do as well. You can do referrals, you can do commissions. Like there's a lot of other things that don't include just writing a check to apartments.com. So my job as an asset manager is to really think through strategically where it's important to make the right investments. It's to listen to the team, it's to understand the concerns, but it's also to help them go a step deeper to really uncover the problem because it could be like I had a client who so we mentioned the coaching, right? One of my coaching clients, he called me. He's like, "Yeah, I've got the 6 unit building. Half of the units are vacant. I don't know what to do." So I'm like, "All right, well,
Mm.
let's talk through it." I'm like, "Well, show me the listing." He shows me the listing. This might be the worst listing I've ever seen in my life.
Oh.
And I mean, I'm looking. It's so it's kind of like co-living is what it was. The space, so
Okay.
it's furnished. But
Okay.
like the mattress had like pee stains on it, man. The curtain was halfway there. Like it was just I was like, dude, take these pictures down immediately.
Yeah. Wow.
Go over there, either buy a new mattress at a minimum, put some bedding on it. Like this is why you're not getting anything, right? You gotta like no one's gonna see that and be like, yes,
Yeah.
I want to live there. So it's
Yeah.
it's it's all those things, right? You really have to understand the dynamics of the property, what's going on, and solve the problem. And I think what happens a lot of times, people want to be passive, so they hire a property manager. They trust that they're the quote unquote expert,
Yep.
and then they're
Yep.
disappointed when they're not getting the results. The truth is, you are the CEO. You have to be
Right.
accountable for your investments. You want to hire the right team. You want to give them the leeway to make informed decisions,
Yep.
but you still need to be the leader, right? Solve the
Yeah.
problems, make sure that you're arming them with the tools and resources that they need. But it is not a situation where you step back, let them do it, and just, check the rent roll or check the bank account every month. Like you got to be more hands on than that.
Yeah, yeah, for sure. And yeah, it's interesting. We were talking earlier how, back, in the mid, teens, 2000s and all that, 2015, 16, basically 2012 up to 2019 or so. I mean, operating was pretty easy. It was,
Oh,
you throw in some two-tone paint, or at least I'm just talking Texas, throw in two-tone paint, vinyl flooring, and $150 more a month. And those days are it's kind of swung the other way pretty hard, and so it's been a challenge, and definitely had to I think everyone the past, 5 years or so since COVID's really learned, really had to buckle down on operations for sure. So,
yeah, absolutely.
um, well, I'd love to, hear a little bit more about your coaching business.
Yeah, so when I started off on my journey, I would talk to a lot of investors. I was hosting meetups in Chicago, have my podcast. So I spent a lot of time talking to other investors, and I realized that there are people who are looking for help and support, and they don't want to be, tricked into one of those rooms that we talked about, running into the back and writing a
Yeah.
big check and not getting the resources that they need. So what we do is we take the things that we've learned from our coaching experience, from our own investing experience, but also from my experience in marketing, overseeing large brands and some of the marketing strategies of those companies. And we do kind of a one-on-one coaching program called the Multifamily Mastery program. And what we do really is a combination of modules. We do one-on-one coaching. We also do some group coaching in there as well. And it just comes down to making sure people have the resources that they need to be confident, credible, and to build connections. And the thing I tell people is confidence can't be faked.
Right.
You can certainly get on a phone call and I could give you some terminology and I could give you a script, but it doesn't mean you're confident, right? It just means you're
Right.
reading something.
Yeah.
Confidence comes from reps. That's putting in the work, whether you have $100 billion portfolio or you're looking to your first deal. You've got to
Mm-hmm.
put in the reps. When I bought my first property in Cincinnati, I didn't live here, but I interviewed people. I was really clear on the submarket I wanted to invest in. I had
Mm.
analyzed probably about 50 deals in that submarket. So when I saw one where the numbers worked, I was confident to call that broker and say, "Hey, what's the story here? I like it. I want to put in
Right.
an offer." And I was able to
Yep.
get that thing under contract in 48 hours, right? I
Mm.
couldn't move with that level of speed if I wasn't confident in the preparation and the work. So confidence comes from putting in the reps, and you need someone to help you understand what you should be working on and where you want to do stuff and help guide you through that process. But that's the way I approach coaching. It's really more hands-on. I think there's a big difference between coaching and mentoring.
Mm.
A lot of people look for mentoring programs. There's nothing wrong with that, but understand the difference. A mentorship program is one where someone shows you how to do what they've done. The
Mm.
problem is your situation may be a little bit different. Maybe you
Sure.
don't have the same resources. Maybe you don't want to do what that person has done, but
Mm.
you recognize that there's value in the approach. So with us, we take a look at who you are, what you want to do, your unique skill set, your situation, and then we're going to help you maximize those skills based on what it is you're trying to accomplish. So I have clients who invest in multifamily, but they're not raising capital. I have
Mm.
clients who are investing in multifamily and they are raising capital. Some are doing small multifamily, some are doing commercial. I've got one guy who's doing apartments. He's doing like a trampoline park. He just bought a trampoline park up in
Oh,
Washington. So
wow.
it really comes down to coaching, and that's what I love, right? That's what I loved in marketing and advertising. When I was in the business world, it was taking these complex challenges, understanding them, and helping to find a solution. Same thing with the asset management side. All right, how do we solve this occupancy issue? Well, let's step back. Let's not just assume we need to spend more on marketing. Let's understand the problem. Let's dissect it, and then let's
Yep.
come up with some solutions that can help us address it. I approach coaching the same way. So that's something that we do with our clients there.
Awesome. That's cool. Yeah, that's great. Yeah, I love the hands-on approach as opposed to, you know, just hey, here's a book or whatever, and come see me in whatever amount of time. So, that's awesome. Yeah, I've been just me, personally, I've been a big fan of coaching from, that's how I got going in, in the apartment world. And that's, if I'm wanting to get good at something and I'm trying to minimize, everybody has the same amount of time per day. And so I'm trying to minimize the time from A to B and I'm trying to minimize my mistakes. I've gotten coaching for, uh, you know, um, for weightlifting programs, for
Yep.
running, for nutrition, just, kind of working out in general. So, I mean, I don't know, huge fan of coaching for sure. So, how do people get in touch with you? What's the best way to do that? And and would love to, if you the name of your podcast show, if anything you want to kind of throw out there.
Yeah, I think there's a couple things. One, if you want to connect, you can certainly shoot me an email. My email is john@casmoncapital.com. Podcast is called Multifamily Insights. It's available anywhere you listen to podcasts. But I do have a free resource that may be even more helpful for your listeners. So we put together a guide called 7 Questions You Must Ask Before Investing in Apartments. And
Mm.
whether you are an active investor or a passive investor, this starts to help you wrap your head around both the sponsor or even if it's you, the sponsor or the team that you're assembling to take on a deal, questions about the market, and then questions about the actual business plan. What I have found is when people invest in deals that don't work out, it's
Yep.
usually because they didn't ask some of the right questions or they didn't identify some of the potential challenges early enough in the process. So it's really important to ask the right questions and understand, what can happen or how the deal is coming together. So this guide can certainly help you along that pathway. So if you go to
Awesome.
casmoncapital.com/7 questions, that's the number 7 and questions with an S at the end, you can download that free guide there.
Awesome. Well, cool. Yeah, appreciate your time. Great to connect. And appreciate your just all the. I think a lot of people can kind of relate to just you were in a W-2 and you've been able to kind of step out of that. And but yeah, just appreciate your time, and we'll look forward to talking to you again too soon, John.
Absolutely. Hey, thank you for having me, Dustin. I appreciate our conversation today.
All right, thanks, John. See ya. Bye.